Welcome to our series of recap videos and to our introduction to accounting course. Now, welcome back to the common share segment of our recap videos. And now, over here, we are going to look at common share issuance and common share buyback and common share dividend payment and how it impacts the three statements. We have some numbers in here already. It's purposeful. We want to show that because before we pay common share dividend, it's actually dependent on profit. So we just wanted to determine some profit here so we can use that one to pay off preferred common dividend. That's why we intentionally put in some numbers prior to time. So when we issue a common share of 5,000, this is the impact. Let me scroll down here so you can see. So once we issue a common share of 5,000, we will get cash of 5,000. Right? It will add on to our existing cash that we have, and it will feed our cash and cash equivalent. We have some receivables and inventory. That's fine. But then our common share balance as preferred common equity will also be 5,000. Same way as it applies to preferred shares. If we pay or buy back some of the shares, so in this case we bought back 1,250 of the common shares. That brings the common share balance because we issued 5,000, we got physical cash 5,000, and then later within the year we bought back 1,250, which reduced our cash to that much, and so our overall cash balance has reduced, and then the common share balance has reduced, and realize that our cash flow, our balance sheet still balances. It also has no impact on the income statement because there's no segment within it where its cost, being the dividend, would have been charged. We have the interest line here for debt financing. We have the preferred dividend here for preferred share financing, but we don't have the common dividend line anywhere in the income statement. So you have to pay particular attention to that. So when we pay common dividend, we realize that we have paid common dividend here of 645, and I failed to highlight that beforehand. I think you will pardon me on that, but you can see that the common share dividend here has been paid of 645. Now the common share dividend payment, you should know that it is based on a payout ratio, a profit payout ratio. So if the payout ratio is determined when you make money, okay, so if you don't make profit, your payout ratio will be 0, because even if you have a payout ratio, you wouldn't have any profit to pay because it depends on the profit you have made. So you realize that let me uncheck this balance. Realize that at this point we have made a profit of 2,150, and we are saying that we are paying 30% of that net income, 30% of this net income, right, to common. This net income to common, that is what we use. 2,150. So 30% of 2,150 becomes 645, which means that the closing balance of the retained earnings here would now reduce by the dividend to the common shares, which is lost in somewhere here, to the actual balance of 1,505. And at that point it won't be the same as we have, because this is the net income to common. So within this we would have paid our dividend for common shares. But once we don't have any line here for it, we straight away adjust it in the retained earnings balance. And that is why when you are doing your net dividend for common shares, you have to do the adjustment in the retained earnings or your surplus balance in order to feed your balance sheet, and that will be good for you. So same principle applies to interest, same principle applies to preferred shares, same principle applies to common shares. Once it is issued, you get money, you buy back, you lose some cash, and when you pay dividends on it, you also lose some cash. And so that's why the dividend payment sessions are all shown here as also a financing activity. I hope this one helps and gives you a solid understanding of the linkages between the statements. And once we pick each block to model, you wouldn't be dazed about where this line is going and why is it going here and whatnot. At least you have these recap videos to go and revise, and these lines will be made clearer to you. And I hope I've been able to explain them to you to get you along the way as a financial modeler. Thank you.